Welcome back. We have breaking economic news. The U.S. inflation numbers have landed, and here they are. On an annualized basis, the numbers are higher than expected. So the deceleration from December's 6.5% annualized pace of inflation, much more modest than economists had hoped. That number comes in at 6.4%. That's headline inflation on an annualized basis to the end of the month of January just passed, 6.4%. Economists had expected 6.2%, so the number is materially higher than expected. On a core basis, when you strip out food and energy, volatile items like food and energy, you get a core advance of 5.6%, also stronger than the 5.5% that economists were expecting, and also representing a very modest, only 10 basis points decline from the 5.7% of December. Oddly, perhaps, the monthly numbers are exactly in line with expectations. The monthly advance from December to January came in at 0.5%. That's what was expected. And the core monthly number comes in at 0.4%. That's exactly what was expected as well. We are getting some restatements of the December numbers as well. Core inflation in December ran at 0.4% on a monthly basis. That's 10 basis points stronger than the 0.3% initially reported. So Greg Newman, the tone of these numbers is inflation coming in, I would say, materially higher than expectations.
You know, I would say that this number could have been super good, okay, or really bad. Mm-hmm. And I would say that this number was okay enough for the bulls. I think it's the monthly core that is the really important component. And I think that that's enough for the bulls to probably hang their hat that inflation is coming down and, you know, that we're still going in the right direction.
And again, that monthly core number comes in at 0.4%, exactly what was expected by economists, and exactly equivalent to the now restated number in December. Why don't we put up our board of the U.S. futures market and see how the futures, there's the S&P 500. So the S&P 500 moving higher at the extreme right end of that graph, ticking upward. What's your take on that, Greg? Markets moving higher in the seconds after the release of these numbers. And there are the percentage advances. They are not hugely different from what we saw, but they are definitely higher.
Well, they're building, and that's important. And, you know, I think that there's, this is a complicated number. I think there was a lot that they're looking at. But I think the fact that it was benign, that it did come in line on a monthly core basis, that's the key. And I think that that was in line what investors were looking for, and I think that you're seeing a bit of a sigh of relief.
Here's the take of Bloomberg News. Bloomberg was able to digest these numbers and write a story before the embargo was lifted. U.S. inflation stays elevated, adding pressure for more rate hikes. Would you agree with that takeaway?
I think that that's been a danger all along. I think that, you know, people got to realize that the Federal Reserve, which was your put and your friend for so many years because they wanted markets to go up for the wealth effect, it's the opposite now. They're now their biggest concern. They don't really care about the market right now. What they really care about is getting inflation down. So everything depends upon inflation. Fortunately for the bulls, this was a sufficient print for the bullish narrative of slightly less inflation to still work.
And we're also seeing that interest rate futures are showing little change on the call of the market on the peak Fed policy rate of now 5.19% by July. Late yesterday, the interest rate futures market was forecasting a peak Fed rate of 5.2% in July. So no big change there in terms of the calculus of the fixed income market on where the Fed ultimately is going. Bloomberg also reporting housing contributed most to the monthly increase. The shelter index accounted for almost half the gain. Food, gasoline, and natural gas also added upward pressure. The bottom line, Bloomberg says, is that the monthly figures are both headed, as expected, in, quote, the wrong direction. We have indeed hit the pause button on the improvement for inflation for now. Now, that's the opinion of a senior editor at Bloomberg News. Would you agree with that take, that the deceleration story has paused?
I would say that the market is humbly saying otherwise, that they believe that that this was a decent enough print for the bulls. So that's what I would echo. But don't anybody be mistaken. This Federal Reserve, their first concern is inflation. They're going to be hawks if there's an inflation problem. That will be, that will spell trouble for the bull market if inflation is unruly or doesn't come down in line. I think this number, I said there was 3 outcomes of today. There was a super good number, there was a really bad number, and there was a middle ground okay number. I think this fits the middle ground okay number.
And you can see by those